What if I told you that your entire investing journey could start today? With just £100, not £10,000, not £5,000, just £100. Most people hear that and immediately dismiss it. It sounds too small, too insignificant, almost pointless. Because in a world where social media constantly shows six-figure portfolios and overnight success stories, £100 feels like nothing. But here's the uncomfortable truth. That belief is exactly what keeps most people broke. Think about it. How many times have you told yourself, I'll start investing when I have more money next month, more money next year, more money when things feel stable, but somehow, that perfect time never arrives. Meanwhile, there are people out there quietly building wealth, not because they started big, but because they started early. Now imagine this scenario. Two people are exactly the same age, same income, same opportunities. One decides to wait until they have £5,000 before investing. The other starts today with just £100. Fast forward 10 years. Who do you think is ahead? Most people assume it's the one who started with more money, but in reality, it's often the one who started first. Because investing is not a game of how much you have. It's a game of how long your money is working for you. And here's where things get really interesting. We are living in a time where investing has never been easier. You don't need to be a financial expert. You don't need to understand complex charts. And you definitely don't need to be rich. With just a smartphone and £100, you can own pieces of some of the biggest companies in the world. You can invest in entire markets. You can start building a system that works for you in the background while you sleep. So the real question is not, is £100 enough? The real question is, why haven't you started yet? Because in this video, I'm going to show you exactly how to take that first £100 and turn it into something much bigger, using simple strategies that anyone can follow. The biggest obstacle for beginners is the belief that investing requires a lot of money. Most people think you need thousands of pounds before you can even consider buying a stock or starting a fund. Because of that, they wait. And while they wait, their money just sits in a bank account, losing value to inflation. This mindset creates two major problems. First, it creates inaction. People tell themselves, I'll start when I have more money. Or it's not worth investing until I can afford a big sum. The result? They delay their financial future for years, missing out on opportunities to grow wealth over time. Second, it creates fear. Investing can feel risky, especially when you don't understand it. Many beginners hear stories about stock market crashes or people losing money and assume that investing is only for experts or the wealthy. They confuse risk with lack of knowledge and convince themselves that avoiding investing is safer than learning how to do it properly. Another issue is confusion. Words like ETFs, dividends, stocks, and mutual funds can seem like a completely different language. Beginners are overwhelmed and don't know where to start. So, rather than figuring it out, they avoid it entirely. But here's the key insight most people miss. You don't need a fortune to start investing. You don't need perfect timing or insider knowledge. What matters is that you start, even with a small amount. Starting small allows you to learn, practice, and build a habit that grows over time. The real problem is not the money. The real problem is mindset. People focus on the wrong obstacle and let it stop them before they even begin. The truth is, £100 is enough to start learning, building confidence, and taking the first steps toward financial independence. So the question isn't whether you have enough money. The question is whether you're willing to take action today. If you can overcome fear, confusion, and the myth that you need a large sum to invest, you can start building wealth with just a small, consistent effort. That starting small doesn't mean you're limiting your potential. It means you're giving yourself the advantage of time and experience, which are far more valuable than money in the long run. Now let's break this down in a simple, practical way so you can actually start investing with £100. The first thing you need to understand is that investing is not about getting rich quickly. It's about growing your money steadily over time using smart decisions. So where does your £100 go? You have a few beginner-friendly options, but the smartest place to start is with something called index funds or exchange-traded funds. These are investment products that let you own a small piece of many different companies at once. Instead of trying to pick one winning stock, you are spreading your money across hundreds or even thousands of companies. This reduces risk and makes your investment more stable. Now, let's simplify the process step by step. Step 1 is choosing a platform. There are investing apps that allow you to start with very small amounts. These platforms let you buy fractional shares, which means you can invest in expensive companies without needing to buy a full share. Step 2 is deciding what to invest in. As a beginner, your focus should be on simple and diversified investments. Index funds are a great choice because they follow the performance of a market, like a group of top companies. This way, you are not relying on just one business to succeed. Step 3 is consistency. This is where real growth happens. Investing £100 once is a good start, but investing small amounts regularly is what builds wealth over time. Even if you can only add a small amount each month, consistency matters more than size. This is because of something called compounding. Compounding means your money earns returns, and then those returns also start earning returns. Over time, this creates a snowball effect where your money grows faster and faster. Think of it like planting a tree. At first, you only see a small plant, but if you water it regularly and give it time, it grows into something much bigger. Your investments work the same way. Step 4 is patience. The market will go up and down. That is completely normal. Many beginners panic when they see prices drop and make the mistake of selling too early. But long-term investors understand that short-term dips are part of the process. If you stay invested and keep adding consistently, you give your money the time it needs to grow. Step 5 is keeping things simple. You don't need to overcomplicate investing. Avoid trying to time the market or chase quick profits. Focus on steady, long-term growth instead. The goal is not to be perfect. The goal is to get started and improve along the way. So when you combine these ideas, start small, invest in diversified assets, stay consistent, be patient, and keep it simple. That is the foundation of investing. Even with just £100, you can begin building a system that grows your wealth over time. And once you understand this system, you realize something powerful. It's not about how much money you start with, it's about how long you stay in the game. Let's look at a simple example to understand how starting with £100 can actually grow into something meaningful over time. Imagine a person who decides to start investing today with £100. Instead of spending it or leaving it in a savings account, they put it into a diversified index fund. Now, they don't stop there. Every month, they add another £100. Nothing extreme. Just a small, consistent habit. Over time, this becomes a routine. Now let's assume an average annual return of around 7 to 8%, which is in line with the historical performance of major markets, like the stock market, in the first year. The growth might not look very exciting. The returns are small, and it may feel like nothing significant is happening. But something important is building in the background by the second or third year. The effects of compounding start to become more noticeable. The money you invested earlier is now earning returns, and those returns are also growing. Fast forward 5 years, and the growth starts to feel more meaningful. Now jump ahead 10 years. At this point, the difference becomes very clear that what started as small monthly contributions, including that initial £100, has grown into a much larger portfolio. The key reason is not luck. It is not timing the market. It is consistency and time. This same approach has been used by millions of long-term investors around the world. They didn't rely on large starting amounts. They relied on patience, discipline, and regular investing. Now think about the opposite scenario. Someone who waits 5 or 10 years before starting. may invest a larger amount later, but they miss out on all the growth that could have happened. During those earlier years, that lost time can never be recovered. This is why starting with £100 today can actually be more powerful than starting with £10,000 years later, because in investing, time in the market matters more than timing the market. Your early investments have the longest time to grow, which gives compounding more power. So the real lesson from this example is simple. It is not about how much you start with, it is about how early you start and how consistently you invest. Even small beginnings can lead to big results when combined with time, patience, and discipline. So what should you actually take away from everything we've discussed? First, the biggest barrier to investing is not money. It is mindset. Most people believe they need a large amount to start, and because of that belief, they never begin at all. But, in reality, starting small is not a disadvantage. It is an advantage, because it gets you into the habit of investing early. Second, consistency beats size. Investing £100 once is a good start. But investing regularly is what truly builds wealth. Small, repeated actions over time can grow into something significant. Wealth is not built overnight. It is built through habits that you repeat for years. Third, time is your most powerful tool. The earlier you start, the more time your money has to grow. Even small investments can become large over time if you give them enough years to compound. Many people underestimate how powerful time can be in investing. Fourth, keep your strategy simple. You don't need complex trading strategies or constant buying and selling. In fact, simple and consistent strategies often perform better over the long run. Focus on steady growth instead of chasing quick profits. Fifth, don't let fear stop you. It is normal to feel unsure when you are starting something new, but fear should not control your decisions. Every experienced investor was once a beginner who took the first step. And finally, take action today. You do not need to wait until everything is perfect. You do not need to have a large amount of money. You just need to start with what you have. Even £100 can be the beginning of something much bigger, if you stay consistent and patient. Because investing is not about how much you start with, it is about how long you stay invested and how disciplined you are along the way. If you want to learn how to build wealth step by step and understand how money really works, make sure you subscribe to The Geeky Investor. On this channel, we break down investing, finance, and wealth building into simple, practical ideas you can actually use. And remember, you don't need a lot of money to start investing. You just need to start.